Well, good morning. Welcome to today's webinar on AI regulation and financial services. We're just waiting for people to be admitted to the meeting. We'll get started in just a few moments. Okay, well, I'm delighted to be chairing today's session on AI regulation and financial services. There's an awful lot going on in the world of financial regulation, as David and I were just discussing. First of all, I'd like to thank our sponsors. We're very fortunate at the FS Club to have a range of sponsors who generously support our work, and we couldn't run these series without their support, so thanks to them. I'm Mike Wardle, I'm the Chief Executive Officer of CN Group, and my role today is to chair the session. Just some housekeeping to begin with. First of all, the session is being recorded, so there's an opportunity to go back and watch again, or to share a link to friends and colleagues who may be interested after the event. We'll get that recording posted up on the website in the next 24 hours or so. Secondly, in order to ask a question, we have a Q&A tab available for you. If you can't find it at the bottom of your screen, you might need to go to the three little dots in a circle, which has more written beside it. And so at any point during the session, please do drop in your observations or questions, and we'll pick those up during the Q&A session towards the end. We have two very distinguished speakers with us today. Adam Leon-Smith is chair of the AIQI Consortium, which is a global initiative to promote the use of the quality infrastructure for responsible AI. He's also deputy chair of the UK's National AI Standards Committee, also chair of the VCS Fellow Technical Advisory Group. David Doyle is with us. He's spoken before with the FS Club. He's known across Europe as a leading expert on EU financial services regulation, as a former diplomat, and now acts as an EU policy advisor between Brussels and London. So really delighted to welcome two such distinguished speakers. No more from me. It's time to pass over, and David, I think you're up first, so the floor is yours.
Yes, thank you, Mike, and good morning, ladies and gentlemen. Well, what can I say in 10 minutes when it relates to a 150-page strong document published by the European Commission under the EU AI Act? What I can say is a couple of things. One is probably worldwide the single most comprehensive regulation in terms of AI. But unlike other jurisdictions, it focuses on not a principle-based approach, but a product safety and risk of usage approach. If I could put this perhaps for our first slide, please. If I could put this in terms of, would you not test the approach to think or to, in terms of test crashing a new car before it's actually rolled out? So the approach taken by AI is very much one of let's test AI before it's brought to the market, and importantly, it's used or misused by intermediaries, third parties further down the food chain. It comes, of course, with some very strong and very well documented extraterritorial implications. It means that all third country, that is to say those countries that are not members of the EU, all third country originators or distributors must have a registration somewhere in the European Union before the AI model can be marketed across anyone or, of course, any of the EU member states. So in terms of its risk of usage rather than application, this is the fundamental distinctive factor that distinguishes, I think, EU AI Act from that of the United Kingdom, the United States, Singapore, China and elsewhere. Secondly, creators of models, and this is particularly important, are liable as to the actual ultimate use of the technology. So, a bank or insurance company, if you develop an AI application for use by your 3,500 intermediaries or brokers across the European Union, or indeed spread across the world, you as the creator within the bank or the insurance company remain liable for its misuse or its differential use throughout the system. And this means that for all high-risk AI systems, this is why they are subject to a prior examination, albeit on the basis of internal audit, as it were, based on EU criteria. But nevertheless, the regulators have the powers to be able to intervene and cross-check on the reliability of those tests. The Act introduces due diligence obligations in the development of all AI systems, including the applications used for targeting legal and natural persons, mechanisms to verify the correctness of the decisions, and measures holding individuals and entities, particularly financial entities and others, healthcare to mention just another example, accountable for all decisions if they are found to be incorrect. So the overall objective, and this was certainly a strong objective on the part of the European parliamentaries, who set out from the very beginning to focus on risks in relation to the actual use of the AI application rather than the technology or the application or any other issue related to the digital application. The horizontal approach adopted by the European Commission means that there is the financial services per se does not have any particularly dedicated, targeted rules and regulations. Although the Commission a couple of months ago launched rather late in the day a public consultation which should be closing fairly soon on the specific application of AI in the financial services sector. I think a specific and explicit recognition that indeed the AI Act needed to have further clarifications and perhaps more rules-binding guidance, which will no doubt follow in the next couple of months. The European Commission, of course, have the ongoing powers to be able to create bespoke regimes for financial services, for instance, by means of secondary rulemaking and such as implementing acts. And I should also mention that within the Commission, the European Commission, they have created a dedicated AI office of 50 strong people who, at least in the initial stages, will be developing secondary legislation, but also in time, I would speculate that this AI office may become the actual pan-European regulator in relation to the application of all AI models. As I was saying, there are 3 levels of classifications of risks. The top level, an outright ban, sort of Black Mirror stuff like behavioral manipulation, social scoring, all of which is prohibited. And at the bottom end of the risk classification, the sort of common or garden spam filters and AI-enabled games, which have to follow voluntary codes of conduct. Now, financial services lies somewhere in the middle of these 2 extremes. Financial services and indeed other companies that use AI tools to determine creditworthiness or credit scoring, or for hiring staff, for example, will fall into this category. It's still considered to be high risk and therefore needs pre or prior authorization by the regulators to be able to implement it. And again, what is critical about all of this is the need to bear in mind that you, the financial entity, remain totally liable for the misuse or misconstrued use further down the food chain by brokers, intermediaries, traders, or agents that are using your app to sell your financial products into the market. So it covers, if we can go to the next slide, please, it covers a very broad church of creators, providers, deployers, importers, and product manufacturers. All actors involved in the development, usage, import, and so on will be held accountable, and not the third-party users. And again, this extraterritorial aspect, which we're finding increasingly given the geopolitical tensions we're going through across the globe, we're now finding that Europe is moving increasingly towards strategic autonomy. Therefore, extraterritorial provisions are now very, very much a prominent part of a lot of legislation, including AI and the Digital Operational Resilience Act as well, which means that providers and users of all AI systems located outside the EU, such as Switzerland, the United Kingdom, the States, China, Singapore, elsewhere, if their output is produced for intended use within the EU, they need to have a physical presence somewhere in the European Union. So it does require third country providers, creators to appoint, at the very least, an authorized representative established in the European Union, and not just a blast plate operation. All AI creators are required to identify and disclose data of the systems that they've been trained on in great detail, by the way. And again, this ultimate responsibility for the ultimate use of the AI application remains with you. Next slide, please. The other big, I think, issue that we need to tackle, and it needs to be said upfront, even if the AI Act was not designed specifically for financial services, many of the so-called high-risk areas fall within a number of very prominent areas of financial services, notably credit and social scoring models, which are used by banks to work out the creditworthiness of people for loan origination and decisioning, automated insurance claims processing and setting of risk premiums, risk assessment tools of any nature using AI are not banned, but they are certainly considered to be of high risk nature and therefore must have prior authorization before they are allowed to be used. And also the whole provision of investment services to people and retail clients via chatbots are also subject to a certain degree of high risk classification. So the high risk financial services AI models, while they're permitted, they must be assessed by the regulators first in conform to the so-called conformity assessment, and they are required critically to be registered on an EU database. Now, I should say that it'll be before the end of 2027 before this database is set up, and the pan-European regulator that I referred to earlier begins to take a more close examination of individual high-risk use cases in the financial services sector. Next slide, please. One of the requirements, of course, in terms of high-risk systems is the assigning of human oversight of natural persons with the necessary skills, and that this must be proven to the regulators as part of the evaluation process. There must be a monitoring system for all these systems. The input data is whether it's deemed to be relevant, solid, and remains under the control of the creator and indeed also the third party. But perhaps the most important issue is responsibilities that you have as a financial institution in terms of third-party risks to be managed by the provider. So as a provider, you will be obliged to ensure, identify, and discuss with all third-party, as it were, distributors, any risks or instances which are linked to the use of AI systems. And this includes third-party being the obligations by providers vis-a-vis third parties must ensure that the third party assigns their name and trademark to the AI system, that any modification to the system made in a way that it remains a high-risk AI model, but actually what wasn't set out to be a high-risk model, but the distributors or the third-party users have diluted or circumvented the AI mechanism to make it much more high risk in going forward. So again, the responsibility lies with you as the creator of this. And any modifications of a non-high risk system, like general purpose AI, for instance, is not or should not be used or transposed in a way that renders it as a high risk third party use. Next slide, please. I should mention also that there is a very strong read across between the AI Act and the Digital Operational Resilience Act. In fact, one of the two, I think, common features between both of these pieces of legislation is the extraterritoriality factor. In other words, putting it very bluntly, there is a total ban on the use of third country AI creators or distributors, and indeed there is a ban also on third country ICT providers unless they have a physical company holding presence somewhere in the 27 EU member states. There's no passporting mechanism, but nevertheless the extraterritorial factor is critically important. My last point is just to say that there is a huge and growing level of divergence in the actual rolling out of AI regulation across the world, both at regional level, the EU, the United States, Singapore, China, and of course the United Kingdom. The UK is adopting its particular approach, which Adam will explain. The US is also pursuing a distinctly self-regulatory approach. And the major problem at the moment is how, in the immediate sense, is how we deal with the divergences in copyright rules, which affect AI between the US, the United Kingdom, and Europe. So fair use exemptions, which allow AI firms to use copyrighted material via short experts, is acceptable without consent, unless the owner has opted out. This is certainly the approach adopted by the European Union. I can't say that this has been met with huge enthusiasm and joy by media and artists, but clearly the EU believes that the notion of copyrighted material can indeed be used without consent, provided the owner has not opted out. Either way, the processing and enforcement systems in Europe, at least for the moment, across numerous platforms and users cases, is not very solid. And this is a problem, I think, that all regions are going to have to face going forward. Will the EU become the game-changing, as it were, role model for EU for the artificial intelligence? Well, I think time will tell, but quite visibly, as an AI developer, creator, distributor from outside of the EU, you have to apply fully the rules by having and ensuring that you have a physical presence somewhere in the EU. Thank you. Back to you, Michael.
Thank you very much, David, for that overview. There's a lot of content, I know, to get through. I'm going to turn to Adam now, who's in Delhi. So a long way distant in geographical terms. But Adam, the floor is yours. Over to you.
Great. So I'm going to actually start by just tackling that divergence question head on, because although there is divergence at a legal level, technology is international. And the things that the technology practitioners need to do in order to build solid systems are the same. I'm here in Delhi with about 40 different countries. talking about harmonizing those technical requirements in consensus-based standards. I've just had lunch with Singapore and the US NIST, talking about how we make sure LLMs are secure. So there is a underpinning level of technology harmonization that sits under the legislation that maybe gives us some comfort that we'll see less divergence than we're worried about at the moment. So per the introduction, I chair the AIQI Consortium, which is all about making sure that international consensus-based standards underpin AI policy globally. And David didn't really have time to imagine, one of the things that the EU has done is they've tied in the whole of the AI Act to compliance with technical standards. In order to comply with any of the essential requirements of the AI Act, which are the requirements of the system, there is a standard that tells a technologist the steps they have to go through. And if they comply with that, then they get what's called presumption of conformity, which is a legal concept I won't go into, but it gives them a lot of comfort. Now, turning to the UK, there's a lot that's been published in the UK. It's not true we have nothing. We have a government white paper on regulating AI, which identifies a set of principles that I'll go through in a moment. We also have, over the last 2 years, a number of publications from the Bank of England, the FCA, the PRA, and even the ICO with a focus all on financial services. The UK philosophy is, as David said, a principles-based approach rather than prescriptive rules. The product safety approach that the EU is taking is really quite novel for the technology sector. A lot of technologists that I speak to are really quite shocked when they realize what it means to go through ex-ante conformity assessment with an application for something that would normally you would go through with a manufactured device, a medical device, any kind of high-risk product that may have an impact on safety. It's also technology neutral. The focus is on outcomes in the UK, not on specific technology. It aims to be pro-innovation while having appropriate safeguards. And it's also, importantly, very sector-specific. So the central government has come up with their set of principles, which they've asked the different regulators to look at how to customize for their sector. The 5 principles that the UK has put in place are safety, security, and robustness, appropriate transparency and explainability, fairness, accountability and governance, and contestability and redress. And different sectors place a different weight on those different factors and use different approaches to deal with them. I just realized my video is probably obscuring my slides, so I'll just move that there. To step through each principle one at a time. In the context of safety, security, and robustness, one of the things that the UK regulators have pointed to is the FCA Principles for Business, the Senior Management Arrangement Systems and Controls, and the Critical Third Parties Framework. But we also have a UK AI Cybersecurity Code of Practice written by the National Cybersecurity Centre, which is currently being turned into a consensus-based international standard in ETSI. I don't have the number, but if you Google the government's code of practice, you will soon find it, and that should be published soon. Key things to think about in terms of safety, security, and robustness for the financial sector include the unique cybersecurity and robustness concerns and the potential gain an adversarial actor can get by poisoning data that's then used for something like trading. Those aren't technically unique concerns, but in terms of the way they can affect financial services business and create systemic risk, they're very important to consider. Financial services obviously already has a very mature risk management frameworks that they need to integrate AI in. One of the key concerns that comes out from UK stakeholders is the increasing dependency on third parties, and this is particularly true with foundation models. I've pointed to an ISO IEC set of standards as well there, which go into a lot of detail about how you can manage robustness, particularly as a risk. And robustness is about primarily about how you ensure that you maintain the performance of the system when it's being fed unexpected inputs. Transparency and explainability is something that the UK actually seems to be putting more focus on than the EU. While the EU says that it's a bit like GDPR in that it says that there's sort of a general explanation of how a system works that can be provided in an automated decision-making context, it isn't requiring what we call local explainability, explaining why an AI system just did a particular thing in a particular instance. And that does have a relevance in terms of the consumer duty, clear and fair communications, and also the automated decision-making part of GDPR, as I mentioned. So it is interesting that the UK is putting more focus on that, and I think it's particularly relevant from a financial services perspective to be able to explain why a decision was made in a particular case, but it's not always possible. There's an ISO IEC standard on transparency, which is due imminently, 12792, and another one, 6254, which really is the state of the art around topics like interpretability and explainability, and that's also its very final stages and about to be published. In terms of fairness, that's something we're not quite as good at in international standards. It's obviously a bit difficult to agree on topics like unwanted bias with a very international set of stakeholders with very different cultures and values. But we do have a couple of standards. The numbers are at the bottom. I won't bore you with 5-digit numbers. There's a couple of standards out there which have just been recognized as the state of the art for medical devices, but are also very applicable to financial services. And there's also the ISO IEC 5259 series, which provides a whole framework for managing data within an AI context. One of the things that comes out of the Bank of England report and survey is that data bias and data representativeness is considered a top 5 risk for UK financial services firms. And because of the impact that can have on consumers, including vulnerable consumers, it's an important topic to consider. In terms of accountability and governance, there's obviously a very strong history of accountability and governance, at least for the last decade in financial services. And most firms do have in place an accountable person for their AI framework in the UK, and often that is executive leadership. We have a standard called ISO IEC 42001, which is the main standard for the management and development and use of AI responsibly. It was published about a year ago. AIQI also has a free course on implementing it. If you go to aiqi.org, you should be able to sign up, and we have a free 2-hour course on ISO IEC 42001, which is the equivalent of sort of 27001 for information security or 9001, in fact, for general quality management. There's also a couple of specific standards on governance in the context of AI, and one that's coming out soon on how you deal with impact assessment, because it's not always possible to understand the impacts of AI pre-use in the market. Sometimes you need to go out and gather information about how it's being used and the impact it might have either on consumers or society at large. Contestability and redress is a key topic again for the UK. This is something that, again, the financial services industry certainly considers itself quite mature in. There is no international standards about contestability and redress, but I think a key consideration here is that firms remain responsible for the decisions taken by AI. So are people actually using AI in a material way in financial services in the UK? The Bank of England survey says in 62% of cases, no, they're not. And there's 22% at medium and 16% at high. Those high materiality cases are concentrated in insurance, risk and compliance and retail banking. And of course, insurance and retail banking are likely have a big overlap with the high risk use cases that David talked about before. In terms of whether AI is being allowed to run amok and do its own thing, 55% of AI use cases to some degree have automated decision-making in place, but only 2% have completely automated decision-making, which then ties back again to the human oversight requirements in the AI Act. So we can see that firms generally do have a human in the loop for critical decisions. In terms of regulatory use of AI, that's happening as well. In the UK in particular, there's synthetic data is one thing that's being used, predictive analytics for research, and tools that really identify patterns in management information, and banks as well, and other financial service institutions are using AI for compliance purposes. The key points here, the UK is taking a principles-based, sector-specific approach to AI regulation. In many sectors, the existing frameworks are largely sufficient. In financial services in particular, there is a focus on outcomes rather than technology-specific rules. Stakeholders have concerns about third-party dependencies and concentration, and of course, I am mostly talking about what's called foundation models there, which happen to have the biggest challenges for explainability. There's a word in the UK we hear a lot, which is proportionality. That's not a word that you'll read in the EU's AI Act. In the AI Act, you are constantly justifying what you're doing based on risks to health, safety, and human rights, as opposed to talking about proportionality. International alignment is increasingly important, and as I've said, one of the key ways we achieve that is through international standards. And we do that supporting a regulatory and a legal approach, which will continue to evolve over time. And that's it. I know we'll go to a panel Q&A now. I've got my contact details on the screen. If anybody wants to contact me for further information, you can take a quick screenshot. And I'll hand back to Mike.
Thank you so much. Again, to a high-level overview, but a fascinating set of differences, I think, between the way the EU and the UK are approaching this. We've got various questions, and David, if you could turn your microphone back on, that would be great. The first one is whether the risk of, besides the risk of AI, does the EU look at sort of fitness for purpose of the AI which is being deployed? Is that something that the EU focuses on?
Well, yes. I mean, the whole purpose of the EU AI Act, which is not principles-based, again, it's focused almost exclusively on the risk of usage, and inherent in the risk of usage is fit for purpose. Now, the problem we have with this is that it's not designed specifically for financial service entities. That's the issue. As I said earlier, I think the Commission, the European Commission, understood in extremis that it needed to have further discussions and indeed consultations, which it did last year by launching a public consultation into the use of AI specifically in the financial services sector. So I'm expecting, Mike, to answer your question, that in the months ahead, there will be further guidance provided by the European Commission, potentially also by the ACERs, European Banking Authority, EIOPA, and ESMA. They'll be probably charged with coming up with some form of rules-binding guidance going forward. But it's very much work in progress.
Thank you so much. And Peter Hanley's asked whether it's possible to get a copy of the document you mentioned, your EU document. We'll see if we can get to that posted, and it'll go on the events page. A number of people have also asked about the availability of your slides, both of you, and again, we'll try and get those posted on the events page for this event. Ian Sheridan has a question about, he said the UK has exceptional AI strength. There's also a major financial services sector. And given that we need to trade with both the EU and the US, how do you think UK rules should develop? I think probably for you, Adam, first.
Yeah, so my personal opinion is we should focus on reaching consensus on the processes we use to manage AI, but we should invest in skills. We want somebody to be able to stand up and say that an AI system is fair. And that takes a whole range of skills: legal, technical, ethical, societal awareness in some cases. And I think focusing on the skills we need to assure AI, and also exporting those skills, is actually a key strength that the UK can build on. I feel that quite strongly.
Thank you very much. We've got quite a few questions coming in, so I'm going to move on. Matthew Achara asks about the introduction of AI regulations leading to a significant increase in compliance costs. Will advanced AI solutions actually remain affordable in the face of heightened regulatory requirements? Adam first, maybe, and David, if you've got a comment, we'll ask you afterwards.
So for many use cases, including financial services use cases, they will initially be self-assessing, i.e. an organization will have to put in place a whole set of processes and demonstrate to their internal audit team that they've done the right thing. Yes, that's going to cause costs to increase, but also the societal cost of having a creditworthiness system that discriminates against a whole subset of society also has costs. If you look at something like a medical device with AI in, it's going to cost about 200,000 euros extra per product to get it to market. But again, what is the cost of medical devices going wrong? So you have to think about the way that the EU is limiting it to high-risk use cases, and they're doing that very deliberately.
David, any further thoughts on that?
I mean, I think I would share Adam's concern that this will lead to quite a significant increase in compliance costs, as, by the way, DORA is doing at the moment. I don't think we should be under any illusion that these two pieces of legislation, where you have a direct read across, ensuring that the operational resilience of ICT systems, which are turbocharged by AI, will need to be subject to the full and complete and comprehensive evaluation under DORA. And it's not just operational risks, but legal risks, reputational risks, risks linked to the protection of confidential and personal data, the availability of data, but also where is the data actually located and processed. And you might find that you're dealing with a local arm of a third country, for instance, AI or ICT provider, but actually the data is being processed in India, China, Singapore, United Arab Emirates, or in another third country, which obviously raises an immediate red flag with the regulators. This is the one area that the regulators repeatedly say to me they're concerned about.
Thank you very much. Samaret Rubin has got a question particularly to Adam, asking how you see the evolution of open finance and AI specifically, with third-party providers using AI to standardize protocols from different data sources, or any other application of AI as part of open finance architecture.
The first thing I'd say is, in terms of interoperability, the AI industry is not there. They're not even talking about interoperability. They're talking about competition, which is completely different to the whole ethos of open banking. I think there's probably a lot of really interesting use cases you could do with open banking and AI. I mean, imagine if you could go and talk to your favorite chat LLM and ask for a financial budget for the next month based on your open banking transaction history. I mean, that would be kind of cool. So no specific comments beyond that, but I think there's definitely opportunity for some innovative startups.
Thank you. Dan Feeney's commented he's just attended the Mobile World Congress, looking at the telco industry. The Chinese tech seems, he said, at least 10 years ahead of any other market. Is the UK taking a look at the telecommunication risks, especially given the cross-border seamlessness of data? David, do you want to have thoughts on that?
Yeah, absolutely. I mean, this is a huge problem, which has accentuated since the geopolitical crisis on our doorstep here in Europe, but also as a result of the change in administration across the Atlantic. But no, the European Union has adopted a risk-averse approach to Chinese investment, and that includes the development, the processing, and the use of data. And of course, this has been extended to a number of other countries that are under sanctions by the EU, the United States, the United Kingdom. So yes, this is a huge problem, and I keep saying to clients, particularly on the DORA issue, which again, the whole issue of operational resilience has been super turbocharged by AI. This is the time to stop and look at where your data is being processed, used, located, and ensure under DORA that it's located somewhere in the European Union, unless that particular third country entity has an incorporated arm somewhere in the 27 EU member states. So yes, it's a huge problem, and it's beginning to, I think, surface quite violently in terms of certain industries that are somewhat associated with financial services.
Thank you so much. Just moving on, a couple of linked questions. Gary Carter's asked, just commented that at a recent meeting of the All-Parliamentary Group on AI, one speaker, when questioned, said that a certain amount of collateral damage was to be expected with AI, as with any new product. How much collateral damage is acceptable and who should decide on it? And the second linked question for Peter Hanley is, will a risk management approach be sufficient? If not, what else is needed? Adam, I think.
How much collateral damage is acceptable? Okay, so I mean, the EU's obviously said none, because they're looking at ex ante conformity assessment in situations where there's a high risk. Although I would say they have kicked dealing with general purpose AI into the long grass a little bit, if it isn't a high risk use case. The UK, by not regulating, has implicitly decided some, and it's not uncommon that we built cars, we didn't invent seatbelts straight away. It's not uncommon that products come to market and we learn about their safety as a human race and then put in the safeguards later. I think that's about as specific an answer I can come up with to the question. To take the second question from Peter, will a risk management approach be sufficient to regulate AI? I think there's different ways of doing risk management. There's a very generic approach where you identify lots of different types of risks and look at how you manage them. And there's the EU approach, which is subtly different in that they have identified a static list of high risk use cases. So, arguably, again, it's a very difficult question to give an answer to. Maybe we can do another webinar in a decade and reflect on that.
Thank you very much. We're running out of time, but I'm going to take another couple of questions very quickly. First of all, James Owliff has asked how the EU and UK regulatory approach compare to other jurisdictions around the world outside the US. And Adam, you're at a conference, presumably, with a lot of those jurisdictions.
Yeah, so several jurisdictions are following exactly the approach that I'm talking about in terms of looking at standards as a way to drive compliance in a way that is cheaper and protects innovation. I think the jurisdiction that isn't is the US at the moment, although they have invested heavily in the National Institute of Science and Technology and their work in standards. What I think is interesting in the US at the moment is you're seeing now that I think, having spent a long time lobbying for no AI regulation, people are now changing their mind because what they're seeing is state regulation popping up all over the place. So I think we'll have to watch the US quite carefully for many reasons in the coming months and years.
Thank you very much. I'm going to take one last question. There's a few questions that we haven't reached, and if I may, Adam and David, we may send them to you afterwards so that if there's further discussion that can take place. But Christine Elliott's asked about what can be said about the enforceability of the respective approaches in the EU and the UK. David, how enforceable do you think the regulatory system will be?
I think, given the very detailed nature of the EU AI Act and the need and this strict categorization of risks, at the moment I think it's safe to say that enforcement is weak. I think that's the only way to put it. Because we haven't actually got an EU AI regulator in the same way as we have an EU banking regulator for systemically important banks, such as the ECB. And we're probably going to move towards, in the next 2.5 years, towards an SEC kind of supervisory structure in Europe for the securities and markets sector. So I would predict the next logical step would be, given the importance and the growth and the evolution, where innovation is far ahead of regulation. In fact, there is going to be a need, certainly raised by the European parliamentarians, by certain governments who are already doing so in Europe, for a common high-level harmonized supervisor that has the powers, the discretionary powers, to be able to review all high-risk AI applications, particularly as they relate to financial services, healthcare, energy, and other sectors of strategic importance. But that's not on the cards at the moment. We have an EU AI office that's housed within the European Commission. It's only getting operational. It will be fully operational sometime mid this year. But I would predict this would become, over time, the next, let's say, 2-3 years, the key unified supervisor for all AI applications and indeed the resilience of the systems that go with it. But for the moment, I sense it's the enforcement is not quite there. And to be honest, at national level, many of the regulators do not have the expertise. This is the other problem that the regulators are concerned about, is the lack of expertise at regulatory supervisory level to be able to monitor these issues.
Thank you very much.
Can I just add to that briefly? Because I'm actually involved in enforcement, and there is, while I agree with David, there is something called market surveillance. And in each of the 27 member states, they have until the 2nd of August to stand up a team that will be proactively scanning products on the market, looking for prohibited use cases or high-risk use cases that haven't followed the proper procedures. But I totally agree, some kind of central function will ultimately be required.
Well, thank you so much. Thank you for those engagement with the question. As I say, there's some we didn't get through, and we'll see if we can continue the conversation. We're out of time, I'm afraid. So just finally to again thank our sponsors. We're really truly grateful for their help in managing this series of webinars. Looking ahead, on Wednesday, 23rd, fewer rules, better people, why discretion makes for better decision makers. On the 24th of April, we'll be launching the 15th edition of the Global Green Finance Index. And on the 30th of April, looking at Taiwan's AI-driven financial innovation and digital transformation. So that'll give another perspective from another jurisdiction. Just remains for me to thank our speakers, David and Adam, for a fascinating session. To thank you, the audience, for your attendance and your engagement today. We look forward to seeing you at future events. Thank you all.
Thank you.